Hello, Wednesday, October 22nd, 2025. Welcome to International Market Notes. While stock exchanges pause at the peaks, the real earthquake happened in precious metals. Gold and silver marked the day with the year's strongest selling wave. Here is the summary of today's market. First, the US indices showed mixed performance. The Dow Jones reached a new record with a 0.47% increase. While the S&P 500 remained flat, the Nasdaq slightly declined. Second, optimism continued in Europe. The Stoxx Europe 600 rose by 0.2% and the DAX increased by 0.29%. France's SASI 40 also hit a new high. Third, there was a collapse in precious metals. A strong dollar and increased risk appetite caused gold to lose 5.3% and silver to drop by 6.7%. Fourth, we saw a limited increase in oil prices. Brent crude rose by 0.9% and WTI increased by 0.5%. Finally, the dollar strengthened and the exchange rate declined. The EUR-USD pair fell by 0.37%, reaching 1.16. Now, let's take a closer look at the reasons and details behind these headlines. Dow Jones, supported by 3M's earnings, increased by 0.47% to set a new record. However, the S&P 500, near record highs, lost momentum and ended the day flat. The technology-focused Nasdaq 100 slightly declined. Analysts see this as a period of consolidation. Craig Johnson from Piper Sandler described this situation as a healthy and necessary correction. Michael Brown from Pepperstone stated that the path of least resistance is still upward. On a company basis, Alphabet and Netflix declined, while companies like General Motors exceeded expectations. Meanwhile, the US 10-year Treasury yield fell to 3.96%. European stock markets continued their rise. The Stoxx Europe 600 index increased by 0.2%. France's CAC 40 index hit a record high of 8,258 points. The drivers of the rise were the strong balance sheets of luxury consumption giants like LVMH and Kering. Additionally, Edenred SE showed a record increase of 20%. While the automotive and real estate sectors led the gains, mining stocks fell along with precious metals. Germany's 10-year bond yield also decreased to 2.55%. The most dramatic move of the day was in precious metals. Gold fell by 5.3% to $4,123.56, and silver dropped by 6.7% to $47.94. There are three main reasons for this sell-off. First, the strengthening US dollar. Second, increased risk appetite due to US-China news. Third, weak demand from India. According to Fawad Razakzada from City Index, it's too early to say the bull trend is over. In fact, this decline could present a buying opportunity. So, what does this price movement mean on technical charts? Let's now focus on critical levels. Let's first look at the S&P 500 index. The latest price is 6,735. Support is at 6,583 and resistance is at 6,760. The index is consolidating near record highs. The 50-day moving average at 6,583, the average of prices over the past 50 days, is the first critical support level for the bulls. Next is the German DAX index. The latest price is 24,330. Support is at 23,204 and resistance is at 24,600. Although the long-term upward trend in the index is maintained, momentum appears to be weakening. Now let's focus on gold. The latest price is $4,127. Support is at $3,726 and resistance is around $4,400. Despite this sharp decline, staying above the 200-day moving average indicates that the structural upward trend has not yet been broken. Finally, let's look at the euro-dollar pair. The latest price is 1.16. Support is at 1.16 and resistance is observed at 1.11689. The pair confirms a downward trend by staying below its 50-day moving average of 1.11689. While technical levels reflect the current situation, what can we expect from the markets in the next 24-48 hours? The agenda for the next 48 hours is quite busy. October 24th, Friday, is critical. At 11 a.m., the Eurozone PMI indices will be announced. Most importantly, at 3:30 p.m., the US inflation data will be released. In addition to this schedule, there are two main risk factors. The first is the ongoing US-China trade tensions. The second is the uncertainties regarding Fed's monetary policy. In light of all these data and risks, how should a business leader or CFO interpret this picture? There are three strategic notes that will fall into a CFO's agenda. First, currency risk management is a priority. The strengthening dollar and the falling EUR-USD exchange rate increase risks for companies with dollar-denominated debt. Reviewing hedge positions is critical. Second, inflation and cost planning. Falling oil prices may ease inflation pressures. This could stabilize costs in the global supply chain. These dynamics should be monitored for 2026 budgeting. Third, cash and asset management. Hedge fund equity positions are at a one-year high. While this indicates a high risk appetite, it also brings the risk of sudden profit realization. Companies should stay prepared by maintaining strong liquidity. In conclusion, let's summarize today's market picture in a single sentence. As stock markets gather strength at record levels, historic sell-offs in precious metals sent a strong signal that investors' risk appetite is changing direction. The analyses in this broadcast are not investment advice. Before making any investment decisions, it is important to conduct your own research and consult a professional advisor.